We finally got what we were looking for, the 2021 annual Berkshire Hathaway shareholders meeting with the great Warren Buffett and Charlie Munger. The Yahoo broadcast is over 5.5 hours long, but in today's video we're just going to cover one specific clip concerning inflation, probably the most anticipated question that people were dying to ask Buffett and Charlie. Is inflation a concern, and should we be worried? Here for your viewing pleasure, 90-year-old Mr. Buffett answering the question of the decade.
I will ask this question from Chris Freed from Philadelphia, and whoever wants to take this on stage. From raw material purchases by Berkshire subsidiaries, are you seeing signs of inflation beginning to increase?
Let me answer that. Greg can give more. We're seeing very substantial inflation. It's very interesting. I mean, we're raising prices. People are raising prices to us, and it's being accepted. I mean, it's not, if we get, well, take home building. I mean, the cost of, we've got 9 home builders, and in addition to our manufactured housing thing, and then operation, which is the largest in the country. So we really do a lot of housing. The costs are just up.
As you can tell, Buffett is very in tune with the pricing pressures facing his various businesses, specifically his very own home builder, Clayton Homes, which as of 2021 is the nation's largest. Framing, if you didn't know, makes up about 20% of a home's price and is largely dictated by the cost of lumber. If you take a look at a graph of lumber prices, you will realize why Buffett sounds so concerned. The price is shooting up at exponential pace, going from about $785 per 1,000 board feet to $1,500 in less than 1 year. Since 2016, there's been a 600% increase. According to analysis done by the NAHB, the surge in prices in last year alone has added $36,000 to the price of an average new single-family home. Some home builders are even slowing production despite massive demand due to exorbitant costs that rise by the day. Single-family starts were up 41% in March year over year, but builders are obviously having serious issues adding to the supply. Sheryl Palmer, CEO of Taylor Morrison, was even quoted saying this in a recent CNBC interview. "We have seen over the last 4 or 5 months what I have never seen in my career before. Lumber has moved to uncharted territory. These substantial pricing pressures are being seen not just in housing, but in other commodities like steel." Take a listen to Buffett continue his analysis.
Steel costs, just every day, they're going up, and there hasn't yet been, because the wage stuff follows. I mean, if the UAW writes a 3-year contract, we got a 3-year contract. But if you're buying steel at General Motors or someplace, you're paying more every day. It's an economy really. It's red hot. I mean, and we weren't expecting it. I mean, all our companies, when they thought when they were allowed to go back to work, at our various operations, we closed the furniture stores. I mentioned, they were closed for 6 weeks or so on average, and they didn't know what was going to happen when they opened. And they can't stop people from buying things, and we can't deliver them. And they say, well, that's okay, because nobody else can deliver them either, and we'll wait for 3 months or something of the sort. But the backlog grows, and then we thought it would end when the $600 payments ended, and I think, around August of last year. It just kept going, and it keeps going, and it keeps going, and it keeps going. And I get the figures every week. I call, or Bumpkin calls me, and we go over day by day what happened at 3 different stores in Chicago and Kansas City and Dallas, and it just won't stop. People have money in their pocket, and they pay the higher prices, and when carpet prices go up in a month or two, we announced a price increase for April. For our costs are going up. Supply chains is all screwed up, for all kinds of people, but it's almost a buying frenzy, except certain areas you can't buy yet. You really can't buy international air travel, and so the money is being diverted from a piece of the economy into the rest, and everybody's got more cash in there.
Just like lumber, steel costs are also seeing an exponential rise in price. Just last year in April, 1 ton of steel rebar cost about $3,500. Now that same ton goes for $5,400. That's a 54% increase in just 1 year. And if we go back to 2016, that same ton was $1,600, or about 3 times less than today's prices. Week after week, these jumps in pricing are causing massive headaches for companies around the world, which, as Buffett explains, are being passed down to consumers who are willing to pay and even wait months for products to arrive. In fact, if you take a look around the world, the price of the stuff that makes literally everything is surging. Raw materials of all types are skyrocketing, and the upward trajectory looks to continue as the world economy roars back to life. From steel and copper to corn and lumber, commodities started 2021 with a bang, surging to levels not seen for years. The rally threatens to raise the cost of goods from the lunchtime sandwich to gleaming skyscrapers. Is this the signal for an inflation disaster? Buffett continues with this.
It is not a price-sensitive economy right now in the least, and I don't know exactly how when it shows up in different price indices, but there's more inflation going on than quite a bit more inflation going on than people would have anticipated just 6 months ago or thereabouts.
Yeah, and there's one very intelligent man who thinks it's dangerous, and that's just the start.
Greg, you probably are in a good position to comment.
Yeah, well, Warren, I think you touched on it. I mean, when we look at steel prices, timber prices, any petroleum input, fundamentally there's pressure on those raw materials. I do think something you've touched on, Warren, and it goes really back to the raw materials. There's a scarcity of product right now of certain raw materials. It's impacting price and the ability to deliver the end product. But, that scarcity factor is also real out there right now as our businesses address that challenge. And it may be some of that's contributed or arisen from the storm we previously discussed in Texas. When you take down that many petrochemical plants in one state that the rest of the country is very dependent upon it, we're seeing it flow through both on price but overall in scarcity of product, which obviously go together. But there's challenges, that's for sure.
Dangerous. That's the word Munger uses to describe what's happening out there. And he lets future CEO Greg Abel finish the rest of the question by discussing the possibilities and reasons for these price points and their acceptance. While Abel offers us a potential source for these price surges, Munger's delivery is instrumental in getting a true look on what Berkshire thinks is happening out there in the underbelly of the economy. Abel takes the Fed version of the story, saying that demand has surged post-pandemic and supply has been constrained, and that this is temporary inflation that we're seeing, temporary until the supply surges back. This is what the Fed likes to call transitory inflation or base effects, basically a surge in prices that will stop once economies here and around the world stabilize and factories are able to match consumer demand. But there is also an alternative way to look at this answer, and it starts with Buffett's initial reaction to the question. It seems to me that he's not very convinced that these effects are temporary. You see, a large part of inflation is human psychology. If, for an example, house prices begin to rise month after month and more people start to think that this is part of an infinite cycle of price surges, they go out and rush housing, feeding into this cycle. This phenomenon can get very dangerous as eventually prices shoot up so fast that people lose trust in the currency, and you get what we all think the United States is immune from, hyperinflation. Now that's not to say that Buffett thinks the end of America is coming. Clearly, if you listen to the entire broadcast, he's very optimistic about the United States long term. But in the short term, based on some of his answers, it seems to me that he's hinting at an interest rate increase. The Fed will have to do something significant to relax these pressures, and an early interest rate hike would be the go-to answer, an answer that will also cause the markets to react negatively, pushing down stock prices and potentially causing a giant correction. Thank you guys for watching, and as always, please make sure you hit that subscribe button if you enjoyed.